Philip WOES, Senior Currency Economist at DBS. He joins us from Singapore this morning. Philip, thanks very much for joining us. There is an issue here. I mean, the euro had its rebound, but it was short-lived, and it wasn't particularly extensive either. So we're back on the slide again.
Well, we're actually taking a view that we should be finding some kind of stability around the current region. We look through, we're comparing this crisis with the one with the ERM, where the euro has taken back, given back all its gains that it got against the dollar last year. And the other thing about crisis is that we realize that crisis always has a limited shelf life, and I think the important thing to look ahead is really that we already have a $1 trillion package. I think the other more important thing is that the Fed has extended swap lines with their central banks. That sort of suggests to me that they do not want the euro to lead to another Lehman-style kind of dollar credit crunch.
When you say this is, you're drawing parallels with the ERM, I presume you're talking about here the exchange rate mechanism when the pound was forced out of that euro precursor.
Correct. That's the 92, 93. During that period, I guess the European currencies fell about 10 months. I think the important thing is that last year we were talking about dollar weakness, and nobody seems to think that the dollar could ever recover. And this year we're back into euro weakness, and like it or not, maybe later into the year we'll probably be talking about the U.S. budget deficit again, into the U.S. midterm election. Yeah.
Maybe, but of course in '92 the pound was forced out, as I say. So this time around, the target is Greece for now, but it could be other countries down the line. Do some euro members get forced out?
Well, we're not taking a stand on this at this point. I think for us, the more important thing is how this is going to affect the region. And I think the biggest threat, apart from exports, is really the payment systems, like what we've seen. We take the view that euro is too big to fail. It is the second largest reserve currency in the world, and that there's a certain level to defend, given that many central banks are holding euro reserves.
Philip, if I was speaking to a fund manager at the weekend who was saying the decline in the euro is basically a stimulus for the exporter economies of Europe. Germany, for example, they benefit because it makes their exports more competitive. So that may provide, at least in the short term, some economic rebound, which is something Asia relies on, because Asia sells a lot of goods to Europe. So how are the Asian currencies going to be affected by what we see in Europe?
I think there's a couple of things to take note here. Yes, if you look, in a straightforward fashion, exports are important. Europe has become, one of the major export markets. And Europe is quite a large economy, that's as big as the U.S. But I think the other more important thing is that at the end of the day, while a weaker euro, will ease monetary conditions, will make Europe more competitive to help them, get foreign exchange earnings. But the bigger issue is that if it threatens the payment system and all the other trading partners, suffer as a result, what would that achieve?
So, in other words, you foresee a decline in Asian currencies, presumably with the exception of the yen?
No. In fact, we're looking at this as a sort of a crisis, like I've mentioned earlier, with a limited shelf life. We are looking at stabilization. We do think that at some level, G3 intervention needs to be considered to support the euro, because the euro is fundamentally too weak to be supported by EUROZONE itself. So
we get a rebound in the euro
intervention.
Right. So we get a rebound in the euro through intervention. What do you do in Asia? What do you buy? What do you sell?
I would say that we get a stabilization in the euro in the lower in the lower ranges between 120 and 130. I don't think the euro is about to go into reversal also just yet, because once we get stabilization, we should be moving towards the Fed story about the Fed, moving to reduce its balance sheet, and preparing for rate hikes. And that normally would entail a process where the dollar will be supported against euro and the yen, but the euro would probably find, a sort of support level around the 120.